Good day, everyone. I'm Currency Geek, and welcome to my day 19 video of the 100 Days of Technical Analysis Challenge. Before I dive into what I've got today, I want to say a very big thank you to everybody who reached out to me during the last 2 days when my absence was noticed. I actually was unable to drop videos for the last 2 days because of my health condition. My health condition was not really stable, so I had to go get myself checked out at the doctor and get meds. But now I feel very, very much better. So I'll be continuing with my challenge. So once again, I say a very big thank you to those who reached out to me privately in my inbox on TradingView, in the comment section on YouTube, and also on Twitter and WhatsApp. I just want to say a very big thank you. Let's dive right into what we've got today. USD NOK, that's the US dollar and the Norwegian krone. A lot of things actually caught my interest on this pair, which was first this buy zone structure here. Price reacting to what it has done in the past, as looking left to get right, and also this M pattern formation right here. Let's dive right into it to be precise. So I'll pick my ray tool and actually place it at this area structure here, and we can just tag this as a buy zone and tag this as a buy zone. Brilliant. And coming back here, knowing this is the neckline, I could just switch to a line chart to mark out the neckline precisely and just drop it right here and say that's the neckline or target. So neckline slash target. Brilliant. So now with this known, I know we have a buy zone on the weekly time frame and we have an M pattern. So we do know the rules of M and W patterns, like I've always explained on my videos. I said the M pattern forms this way, whereby it comes back for a retest at the net line, and whenever it does a retest to the net line, it's always at a fib level. That's one of the significant fib level, either the 50%, the 61.8, or the 78%. So then back down to the direction it's supposed to move, and same applies to the W pattern. It will form, then come back for a retest to the net line, which the retest is actually aligns with the fibs level before projecting back in the direction it's supposed to go. With that known, we do understand the concept behind this. So to the daily time frame now for more clarity. Now on the daily time frame, we can see how price reacted at this area. So I can actually take my box tool and just place it at this area structure here. And so we can see it's a buy zone within a buy zone. With this known, I'll actually be looking to go long on USD and okay, that's long, right? Like this. Let's go long, then expect price to react at this area of structure here. Now I have a very huge bias that when price gets to this level, there is a huge tendency that it might break this level. Why? Because if we go back to the weekly time frame, we can see the major directional bias is an uptrend, and it's a very strong uptrend with this crazy momentum candles seen all around. Yeah, and also it failed to break this last area of structure. If it had actually broken this last area of structure and moved down below this area of structure, yeah, I would actually be looking for I would actually know there is a huge tendency that prices still go short. But looking at this major trend and how price is actually moving within it, I believe there is a very huge tendency that when price comes to this net line, there is a huge tendency it might break, or it would break to be precise. So with this known, I actually understand how well, if I do up on a buy to actually TP at this level, then wait for price to react. If it does reject, I'll follow it back to the downside, and if it does break, I'll look for a major retest around any area of structure here, then look to go long on it also. So now, zooming closely into price, zooming quite close into price, we can see that this weak area here, which was the last area of structure on the daily time frame, was broken, and some sort of weak retest happened, but not that too, well, not too perfect to be precise. So some sort of weak retest happened here. And also, if we do look closely at this area, this is a bull flag continuation pattern. So knowing that this is a bull flag continuation pattern, just pick up my tool here and nicely done. Okay. So knowing this is a bull flag continuation pattern, we can see how well it broke out, and it's actually out of the pattern, the continuation pattern formed. So with that known, it's actually a heads up that there might just be massive moves. We do know how exotic pairs move, just some crazy move and just gets to the net line real quick. So knowing that we have a bull pattern, a bull flag continuation pattern here, what I'll be expecting majorly now, it's a retest back to this level. It's broke before I actually look to go long. So I'll be expecting a retest back to this level before I look to go long, so I can actually take this out. Brilliant. So I'm expecting a retest back to this level, the neckline or the area of structure it broke, before looking to go long. So to the 4 hour time frame now, knowing that the buyers are clear and everything is seen, we do understand that this was a fake out, and see the way it rejected real quick. Same applies to this area, but this is not a fake out. We can see price has closed an indecision candle, which was supposed to reject back into this price action area, but no, it didn't. We can see how well it's trending to the upside. And also, if we do look closely at this pattern form, this is a W pattern here. So I expect price to actually still move a little bit higher, then come back for a retest of the net line before projecting higher. So the bias actually straightens or aligns together. So, and also, if I do pick a trend line, trying to get a trend from this area, we can see how this bearish trend broke. So I do have a major thing I do when I'm in the markets. I look for a bearish trend broke, a last level break. Once those two things are confirmed, I look for other confluences that will actually back up my bias on the chart. So we can see that this bearish trend broke and retested it. Yeah, few times, one, two, three, before the big move happened and started moving to the upside. So my major bias on USD NOK is to go long, like an unchanged bias is to go long. And we can see how well when it broke this level of structure, did a retest one, a retest two, created an area of structure, yeah. So retest one, retest two, and all of a sudden broke that level of structure around here. And if I do pick up my trend line to actually put it out to be seen properly, we can see when it broke that level, that's it created this new high here, retest, major break of this high, a retest, weak retest, and all of a sudden price projecting to the upside. So we can actually see how all the factors to go long on USD NOK aligns perfectly. So my bias on USD NOK is to go long, like long back into this 10.17157 level. Then so that's majorly my bias on USD. Okay, nothing too big and nothing too small. Just once your factors and confluences do align on a pair, just follow it down. The market will surely do two things: move in your direction or against your direction. And once you learn to accept, it's called a high probability setup and not a high expectation setup, you will do well in this space and never take a loss to your heart and also a win to your heart. So I'll end this video here, and if you do have a sentiment or bias in alignment or against my bias, please do drop it in the comments down below, and please do like and follow. Thank you.